And hopefully we can get this going. Record to the cloud. Hey guys. All right. I think I see myself good. And hope you guys are doing great. Hey, how you doing? This is Dr. Greg McLeod from the Elite Traders University. So glad to be here with you here for this Thursday Power Hour. And we have a really great program lined up for you. And this is where we're going to discuss how to trade the FOMC decision. What does FOMC stand for? Federal Open Market Committee meeting. It's our Central Bank of the United States. It's where the decisions to be made to raise or to lower interest rates. And interest rates are so key for us to know about those interest rates, to be able to know where the currency market is going to go. Interest rates are the key drivers of Forex pairs. So it's very important for us to know what the FOMC is going to do and see if we can see how it's going to impact the currencies which we trade. And most importantly, we'll see what currency pairs that are actually going to be the most affected, impacted. And so we're going to do that. So if you're on the call and you're live, let me know in the chat box, by saying live, that lets me know if you're live. If you're watching this as a replay, type replay. Don't be a smart butt and go, hey, replay, and it's live, okay? So glad to see all you guys. Welcome to all the new members of the Live Forex Day Trading Den. We are a fast-growing, dynamic trading community of like-minded, short-term day traders who love trading Forex. We love trading indices. We love prop trading. We love making money. We share ideas. We share tips. We share our trading setups. And so we work together as a community. So glad to be part of our growing community. Glad for you to be on this call. And if you ever need further help in your trading, I'm going to show you a couple of places where you can actually look inside of our trading community to find expert help that you may need, right? So I'm going to share my screen. I'm going to share our screen here. Share. All right, share some sound maybe. All right. So you're looking at the Live Forex Day Traders Den. You can always reach us at facebook.com/groups/cash. And if you scroll to the very top, there is a menu bar underneath all the 861 members we have here. We can go here to guides. Under guides, you're going to find lots of, you're going to find in guide 2, you're going to find live trading. The 3 mistakes that Forex traders make. You're going to find some more live trading sessions, how to make money forecasting Forex market using stocks as a guide. So there's 24 videos or 20, there's a lot of videos here, a lot of educational material that is here that I've recorded for you, absolutely free, cost you nothing. And it's good quality information for myself, a 30-year trading veteran. It's, worked on Wall Street as a currency analyst, one of the world's largest Forex broker dealers in the world. And so I help people. I have a Elite Traders University, a school to help people learn Forex, take their trading to the next level. So if after these trainings you still need further help, if you want to work with me, if you think that you're a good fit for our program, if you like making money, well then reach out to me. You can reach out to me always by either you can direct message me with the Messenger app. Click the Messenger app and you can chat with me like I chat with many people. Ask me some questions. Maybe we can set up a Zoom call and then we can see if you're a good fit, see if I can solve your problem, see if you, I can lay out a blueprint for you to help you reach profitability faster, okay? And if we feel that you're a good fit and that you have what it takes to perform in our program, then you can ask us how we can get started working with me on a more personalized level in the Pip and Run Forex Scalping Bootcamp, okay? So many of the people that you see in the group who have some outstanding performance and outsized gains, they got those gains because they worked with me. They're my children. They're the people who've graduated from my program or are in the middle of my program. Some of them are just getting started, but the Pip and Run strategy is so powerful that they can post their results. And so I look forward to helping you. If you're brand new and you don't know what Pip and Run is all about, well then, just reach out to some of our students or some of our happy students and find out more. Okay. So anyway, but we're going to talk about the FOMC meeting, and I want to talk, when we're talking about that, I want to go to the calendar. We want to go to our calendar, which is the economic calendar found at My Market Heat Map. My Market Heat Map is my powerful tool, my top secret tool for finding what's going up. Green is up, red is down, gray is stay away. It tells us what's hopping, what's popping, what's dropping, what's not in the currency market. And you can access it for free. Just go to My Market Heat Map and scroll down to the bottom, and you've got these 6 powerful heat maps, one of 6 powerful heat maps. You get one, which is the Forex majors. There's the Forex majors, there's commodities, there's crypto, there's stocks and commodity, there is also indices as well. So there's 6 different heat maps, and we're actually going to expand to 7 heat maps. We're going to have the currency crosses and yen pairs as their own heat map as well. But here it's very easy to see Kiwi dollar's in an uptrend, and so I want to probably look to buy Kiwi dollar, and look at shorting. Green is up, red is down. But another thing that you're going to have access to for free when you come to mymarketheatmap.com is the economic calendar. Economic calendar might look a little funky there. Just refresh the screen and click show more. All right, click close that. Okay, so here we go. Here's the economic calendar, and we can actually go ahead and take a look at what's going on. Like, for instance, we have the ECB rate decision that came out, right? The press conference, they actually cut interest rates from 4.25. They actually cut it to 3.65. So a lot lower. They cut it like about 60 basis points or 55 basis points. Yeah, they are 50 basis points, a 50 basis point cut. But the euro still went up, right? Why? And then we had PPI come up, and it was hotter than expected, 0.2% initial jobless claims. But what we're going to do is go to next week, and we're going to look at the FOMC rate decision that's coming out. And that is going to be on Wednesday, September 18th. It's going to be at 2 p.m. And FOMC stands for Federal Open Market Committee. Currently, the central bank interest rate stands at 5.5%. 5.5%. Now, the currency that's most impacted, well, all of them are impacted, but it really impacts the US dollar. And since we trade the US dollar against other currencies, usually when this interest rate is going up, the major currency pairs are going down. So they're set to cut rates from 5.5, they're set to cut it 25 basis points to 5.25%. And the reason being that inflation has come down from the highs that we have seen. We saw inflation. In fact, let's go to the trading view so we can actually see where we've gone on this inflation route. In fact, I've got some inflation indicators. What is inflation? Proof stocks or something like that. Where are my inflation economic indicators? Inflation, U.S. inflation, right? So we had U.S. inflation, and so I think we can compare supercharge this rate of inflation year on year. And yeah, we need to get to a higher time frame, like out to a daily, switch to monthly. Okay, all right. And we're gonna look at one. Okay. Right. So this is inflation. This is the chart, year-on-year inflation. And the interest rates start, right after the pandemic low that we had, we started to see inflation start to rise as people were shut in, they couldn't work, supply chains were disrupted, and supplies were getting low. And they really created this perfect storm of, hey, higher prices. To fight higher prices, the Fed has as disposal interest rates. So what they're doing is actually producing or printing less money, right? They're already producing. We're already like $31 trillion in debt, which is it's an incredible amount of money. It's like lining up lining up like $100 bills from here to the moon and back or around the earth several hundred times, right? That's how much we're printing money. But we actually slowed down the amount of printing, which when they're raising interest rates, they're actually reducing the money supply. And you know what happens when the supply of something goes down? If the amount of dollars in circulation goes down, the value of the dollar goes up relative to other currencies. So inflation is going up. And so what the Fed did was they start raising interest rates. And when they start to raise interest rates, well, then guess what? Fewer people can buy stuff because fewer people have jobs, right? And then prices are going lower because it's curbing demand. Demand is dropping, prices are dropping. So here we are at 2.5% inflation. So we're right back where we were roughly, for most of the time. We're still, the Fed wants us to get to 2%. They have a 2% target. Their target's 2%. I think we're pretty close, but they really it's really stubborn here. Why? Because housing is a big key. It's very expensive for people to buy homes. The younger generation can't afford homes. So inflation is still very sticky in housing. Inflation very sticky when it comes to insurance, car insurance, home insurance, So even though maybe food has come down a little bit, other things have not come, and no matter how much they cut interest rates or whatever, it's not a monetary policy. It's like a supply problem, right? Now, one proposal that I guess the Republicans talk about is drill, baby, drill. If they produce more oil and energy, it will also lower the cost of goods sold. Why? Everything needs oil. If you buy a tomato, it came on a truck. The truck used diesel fuel, right? It came on a train. It used diesel fuel. It came on an airplane. It used a jet fuel. So and prices for fuel has been very, very expensive. I think I came back from California and back in July, and premium unleaded, it was like $6.50 a gallon. It's like, really, But yeah, so fuel prices are up. So if fuel prices were to come down because they produced more cheaper fuel, well, then we might break through on some of the, at least we, probably not so much on, because even housing, lumber comes on a truck, and roofing and furniture and carpeting and plumbing supplies and building material, those materials are more expensive because fuel is more expensive. So if you could produce more fuel, more energy, then that's going to make things lower. Now, if you're an environmentalist and a tree hugger, and you want to switch to electricity and batteries and things like that, understand that batteries don't make themselves. They don't grow out of a tree. It'd be nice if they grew out of but batteries are expensive. You have to mine and use all kinds of heavy machinery and mining and water to create batteries. To generate the electricity, you have to burn natural gas or coal-fired plants in order to generate. You're generating electricity. The wind turbines have to be made. They use gas and power and furnaces and smelting steel. There's a lot of stuff that goes into making these clean, and it would take them like 20, 30 years to actually repay all the carbon that it takes to make them in the first place, right? So yeah, we would have a larger carbon footprint. Our inflation would be lower. So anyway, I'm just deviating just to give you a little lesson on that place. Oh, that's stupid. Just produce more. How's that going to lower inflation? Because stuff doesn't get to your store or in your neighborhood magically, right? They haven't made the teleporter, the Star Trek teleporter, transporter has not been created yet. So stuff that gets to you comes by truck or train or plane, and that uses gasoline fuel, jet fuel, petroleum products, and that stuff is high right now. So guess what? By producing more of it, everything goes down in price, and inflation is not a problem. Now, I'm not telling you how to vote, and I'm being apolitical, but there's one party that wants to raise gasoline taxes, reduce the amount of drilling, and that will raise prices, right? And on the other hand, there's a party that wants to drill, baby, drill, and they might maybe overzealous, destroying our natural wonders and our parks and stuff like that. So they, but you understand, wherever you stand, that's what's going to happen. You're actually voting for more inflation or less inflation on a, just on a macro basis. Again, vote, get out there, vote often. No, vote off, no, vote and vote. Don't vote often. Just vote once, right? Anyway. So anyway, this is inflation, and I'm going to plot it against, if I can I do the TNX, which is the 10-year Treasury note, right? Which is our, so let's see if we can, right? And you can see that the Treasury note. I'm going to actually take this off. I'm going to this go TNX, which is our 10-year Treasury note, and of course it's going to be the same, right? So the interest rates fall. See 5%. This is, if this is the 10-year Treasury note, and we can see that as this is falling, right, the dollar is going to be falling too. So let's look at the dollar, right? So that's the 10-year Treasury note. Look at the dollar index, and you see that the dollar has rallied because interest rates have been up. We went from 0 to like near 0% interest rate, 2% interest rate, all the way up to 5%, and the dollar has gone up because interest rates have gone up. Now, they're talking about a cut, and you can see they've been talking about a cut for a while. In fact, back in December, they thought about, we're going to have 5 cuts. And then the job market was so strong, right? But remember, I showed you that article where they actually investigating all these fake job numbers, that where all the jobs are, they said they overestimated by about a million jobs that just vanished. So the job market wasn't really that strong, which means they should have cut rates a long time ago. Do they have to play catch up? Well, they only cut it. The analysts say that we are only going to have a cut of maybe about 25 basis points. Okay, now this would, we could break this support here on the dollar because it's going in the direction of the interest rate predictions, or most people are voting for a 25 basis point cut. So what will this do if this is going down and the dollar is going down? Well, then look at the anti-dollar. The euro should be going up, right? And we can see I'm actually I'm in a little trade with like $4, right? Let me just get rid of that so we can trade. Trade settings. I'll take that. Okay. All right. So here we go. So here is what's going on with the euro on a monthly chart. We hit this bottom here, which was the high of the dollar, because the euro is the anti-dollar. So this is the euro versus USD 1 month chart, right? And I'll use traditional candles in case you guys, okay. So here are traditional candles. And you can see that we got to like 95.24, and we've made some higher highs and higher lows. So we see the euro actually in an uptrend, right? And an intermediate term or short term, right? So people that might say, well, Greg, this is a counter trend rally. This thing has been dropping for so long, right? It's been dropping. It hasn't been dropping since 2008. Since we had a high about 160 or so. Yeah, the 1.600 area. We've been dropping pretty much for the past 16 years. 16 years in a downtrend. with little rallies in between, right? But for the most part, we got a rally and a drop and a rally and a drop. And right now we're starting that rally. And so we've got maybe an inverted head and shoulders pattern here. And this is on the euro, and we'll probably see similar patterns on, but if we really stretch this out from now, the euro started trading in 1999, not back in the dinosaur days. I don't know why they put a dinosaur there. It's kind of weird, huh? They got a dinosaur there. Like, well, back in the caveman days, the euro was trading at, 1970 was Bretton Woods agreement where the dollar came off the gold standard. Gold hits an all-time high. So you can see that, I'll show you that later. But see, we've been actually in a little bit of a, this kind of a sloping uptrend here, right? On the monthly chart. And, and we've really gone extreme, an extreme low here. We've got some support here, right? And so there'll be prices do come to these cycle lows coming back. We had the cycle low here. Looked like we had a double bottom, multiple bottom. Price dropped. Didn't drop that far. And now we're back above. This is like our failure swing. Fails to make a new low. Does make a new low, but we're back in this range right here, right? So buyers stepped in, and now we're seeing a possible move back up toward that 124 area, back to 121, maybe 113, right? We'll probably see a rise in the euro moving into FOMC, especially if the Fed chairman in his minutes maybe will discuss that, they can see that inflation is going lower, and there's no need to keep interest rates so high, and maybe to get the housing market to jumpstart lowering rates could cause people, because I bought a house, I'm locked in at 3%, like I'm not selling, you can't find a place cheaper to live at 3%. But if interest rates get back into 3, I might buy another house or something like that. So it might cause people who maybe want to sell or to downsize to be able to afford other forms of housing if they can get a cheaper interest rate. But being locked in a mortgage at 9% doesn't make any sense. So if they cut more than expected, like it's widely expected that they're going to cut by 25 basis points, so it'll take us down to 5.25%. But if they're aggressive, and maybe let's say they do 50 points or 100 basis points, right? That could really get the stock market going higher and could really spark other, the euro, the pound will probably be next on the list. Even though they just recently cut. The ECB had a rate decision, and they cut rates to 3.65%. They cut 50 basis points, right? So here is, I'm going to move all these lines here. So here is the British pound, and we can see this kind of like capitulation, very strong capitulation. Pinocchio bar, hey, it's Pinocchio, let's get short. Oops, sorry about that. You guys got stopped out, right? Pinocchio lied, right? His nose is pointing down, and now price is moving up. Again, we have the formation of a possibly inverted head and shoulders, a very bullish pattern, right? So we could see a break of a downward trend line. So I would be, again, this is GBP versus USD, right? So GBP / USD. And remember, USD is the same as DXY, right? And DXY is going down, right? And if DXY is going down, then GDP is going up because they are the opposite of each other, right? So, right? And so GDP, on the other hand, that's going to be on the upswing. That makes sense? Because DXY is heading down. Why? Because of interest rates. Interest rates are falling equals falling USD and DXY. So that's I keep things pretty simple, you know, and this is a pretty simplified model. The dollar is in a falling after being on top, king of the hill for such a long time. The dollar is going to probably be lower for a long time. So things like Aussie dollar. This is a monthly chart. Again, long wick capitulation at the support area right here, actually. And the prices are rebounding from here. I'm going to move. Right. So you can see it's still coiling, lots of low volatility. Then we will expand to high volatility. We're going to be looking for a breakout. So actually, this is a pretty good currency. Like, hey, it's sitting back here. It's correlated to China. So it's not moving as fast as the other currencies, right? Because, it's correlation to China. China, the stock market has been taken on the chin. And remember, when the Chinese market catches a cold, then, Australia, New Zealand takes it on the chin. You can see New Zealand, same way, kind of sideways consolidation, not really moving that much because of the, correlation to China, but it is, we are in a upward, with upward slant, that's not as strong. So what you want to do is go through DXY and you want to take a look at something like gold. Look at XAU USD, which hit all-time high today, right? Look at that. Look at that. That's a monster, right? It broke out. Oh, get rid of the moon phases. Higher highs, higher lows, very strong uptrend in gold. Why? Because gold's priced in dollars. And so now, and that's why I have said before, when in relation to my gold analysis, is that when the dollar starts dropping, gold is going to take off because people have money, and you don't want your money to lose value, right? So if you have it stored in cash, you're losing money. So smart investors are going to move into gold. They're going to move into Bitcoin. They're going to move into real estate. They're going to move into stocks. They're going to move into something that will hold its value because the dollar is losing value against gold. We look at Bitcoin, BTC USD. As interest rates fall, other assets are going to become more valuable, right? So here is Bitcoin. Nice big round weekly. It's probably getting ready to surge to the upside. And so that FOMC meeting, we're sitting at the 38% retracement on Bitcoin. Remember, it's BTC. What's the symbol? Let's analyze this. Why people go, well, why? BTC / what? USD, right? USD equals DXY. DXY is going down. Wish I just had a down arrow, just a quick little arrow. Oh, there we go. Arrow down. Yeah, right. So BTC is going to be up. BTC, right? That's going to be up. There we go. This is Because when you're buying BTC USD on a trading platform, you are selling dollars. You're going short dollar and then long Bitcoin, right? So that's what you're doing, right? I think my EUR USD should be up, right? Oh, what's going on here? Go here, EUR USD, like that, and let's go. Let's take a quickie look. Positions. Yeah, we're up, right? Yeah, it's starting to move, right? Like it's an uptrend, higher highs and higher lows. We should be moving on up like George and Wheezy. We went on an hour chart, and we are breaking out. Breakout. Da 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 da. Yeah. Oh yeah. If I get back to the old high, the old non-farm payroll high, be really nice. Pick up some cash, pick up $3,000. That'd be cool, right? Okay. Anyway, FOMC is coming up, and you need to watch out for it. It's gonna be out this Wednesday, the 18th. Where's my my market heat map? Yeah. So that's the big one. There's gonna be inflation year on year in the euro. There's gonna be lots of inflation data from Canada. All these are gonna be I use the economic calendar to tell me what to trade. And looking at the Canadian dollar is gonna be in play on Tuesday, right? And then with Wednesday, we have the UK data, inflation data, and the euro, European Central, the European Union. That's going to have a lot of inflation data too. But the big thing is going to be this one here. And that's going to be a Wednesday. And then Australia, it's got unemployment rate, full-time employment change. That's going to be out as well. And then we have the Bank of England Super Thursday. Man, we have the Bank of England is going to possibly keep rates unchanged. They're going to have the BOE rate decision at 7 o'clock in the morning. And they're going to have initial jobless claims. So the pound will be in super play, probably Aussie, and then we're gonna have you can actually trade dollar CAD or euro, and then the Canadian dollar. Let's take a look at the Canadian dollar. Quick glance at that. Then we'll go to a Q&A, see what questions you may have regarding to what we're talking about. Let's go ahead and take a look at take a look at me now. Yeah, let's take a look at the USD CAD, right? And remember, if the dollar is falling, then Canadian dollar CAD will be falling as well. It's already been falling. Look at that. Look at this slide. It's like a sled ride, right? I'm just looking at the 1 hour, but if we look at the daily, right? I mean, we've been in a range it could not get outside of itself. It's like, come on. It's like, I thought for one day we would get up here to 146. We never did. But we've been trapped in this range between 130, 143 and 139.45 for a long time, right? But now we're getting some little structure breaks. We got another little range here, right? Little range in there. And we broke this range here. And now we're testing the backside of the range, right? So we broke fake breakout. This is a bull trap. Bull trap by the breakout. I'm going long. Yeah, man. Oh, snap. That sucks. What the? Oh, yeah. You know? Where was that one? I made it get out of it. It's kind of funny. I was trying to load MT4 and MT4 starts loading. It's hilarious, got an error. And all these guys, usually they're like happy and cheerful, I got this error, this message, But anyway, back, Greg, back. Let me just check to see. let's see if you have any questions. I might have lost my train of thought, but let me see. So just check quickly. If you guys have any questions, I'm gonna do a Q&A. There's something you want me to look at, a chart or something. Guys, showing you the guides. Okay. I'm gonna check if you have something printed below. Hey, Sean is there. I see Sean, he gave me a like. Pedro de la Torre, how you doing? Buenos noches, muchacho. Hey, how are you? ¿Qué pasó? Mi compadre. Right? So thanks for the thumbs ups and the likes and stuff like that. And let me know if there's something you want me. I'm going to see if I will Thursday Power Hour chat. Stay in this chat. Live. Oh, yeah, there you are. And Sean is live. Hey, Sean. Thanks for those Bible scripture. Very helpful. Awesome. Hey, it's going into infinity. Okay. So I don't see any questions in the chat. If you're in the Thursday Power Hour chat, I am here, right? Let me know if there's anything you want me to analyze or to look at. If not, I do want to thank you so much for joining me here. And like I said, keep in mind about these economics things. Let me show you some resources that I like looking at other than, right? Go to CNBC, right? And then you go to CNBC, a happy lady there, get rid of all this. Let's see, they've got activate later. Go here. So here you can look at the pre-market. The Dow futures are gonna be positive. You can check what happened in the US, what happened, look what happened today. We're up 235 points in the Dow, 0.58%. S&P 500 up 0.75, 0.75%, 5,595.76. NASDAQ up a full percent, 174.15 points at 17,569. Russell 2000 up 1.22%, 2,129.43, up 25.58. And then we can take a look at oil. And oil was slightly up 69.29. We've really slipped on oil. Get it? Slipped oil. Oil has been, and really powerful things going on with China's slowdown. China is slowing down. They don't need as much oil, right? So U.S. crude oil price rise more than 2% as Francine disrupts production in Gulf of Mexico. Let's take a look at oil because, yeah, it rallied, but the fundamentals of oil are too good, right? A lot of guys are predicting that oil will continue to. In fact, let's. Do I have commodities? I do have here. Commodities under C. Commodities. I really need to have a oil energy sector, right? Right. So commodities. We go to oil, sugar, U.S. oil. Okay. And you can see, look, yeah, it's up 2%. It's a rally and a downtrend, I mean, you want to smack that baby down short, right? This is a rally. This is on the daily chart. A rally against a downtrend, right? And we could probably go a lot lower in oil. I mean, interesting. We might have hit a double bottom here. Maybe that was it. Maybe that was it. Okay. Very close. Let me move this line out of the way so we can. Yeah, we almost have multiple bottom, right? So there we go. We might. See, we hit this area 1, 2, 3, 4. I wonder if we blow through that and keep going, right? This looks like a descending triangle pattern, flat top like that, where the lows are the same, but the highs are getting lower and lower and lower and lower. That we break this, we could see a big drop in oil, right? That's not what you want to see because this failed. It tried to get to the old high and they didn't do it. And so, yeah, that was it. It tried, failed, and then lower lows, lower lows. I mean, lower highs, lower highs, lower highs, lower highs. So I wouldn't fall for this this trap here, I think we break and there's lots of space to the downside, right? You can take a fib from where we were negative. Look, we were like negative 74 cents a barrel. We can see $50 a barrel oil, right? Yeah, that's something. I mean, that's something. Yeah, make me. We'll get a break at the pump. See if we're gonna get a break at the pump. Whoever is president, it really doesn't really matter. A lot of this stuff is cyclical, guys. That these guys have no control. They promise you, yeah, I promise you, yeah, vote for me, and this is like it's gonna happen anyway because we look at charts, guys. We're chart readers. We don't need the government to tell us what to do, right, or how anything is gonna be because we can see this stuff all ahead of time. That's the power of you being a trader, being able to capitalize off of these things, right? Oh, look, I'm up $220. Hey, I'm getting paid while I'm talking to you guys. Isn't that great? Wouldn't you like to learn how to trade like this? Wouldn't you? Wouldn't you like to join the Pip and Run Forex Scalping Boot Camp? We got a short, we got 12-week program that can get you in and out. That's what, 3 months? 3 months to become a professional trader. I think that's a pretty good, cool deal, right? Just go ahead and shout out to me, say me in the comments below, and and we'll get you on a Zoom and see if you got what it takes to join the elite at Elite Traders University. Okay. And let me get back to the Facebook group so I can see if you have any questions. Yeah, no, that's the no, that's not it either. Oh, that threefold. Sean, he responded. He's going to my show. I need to change the date and the time. The time says I need to change that to. I need to edit this, right? And it's not 9 p.m. It's gonna be 7 p.m. because I gotta eat dinner or something like that. And let's make that and then just the hours gonna be to 8 p.m. right? 8 p.m. Well, this one, well, forget this one. All right. Do this page. Next week. All right, next week. We're going to edit this. And we'll make that 7 p.m. I'm gonna do that just now because I'll forget, and then all you guys be waiting around for me at. I'm gonna be trading. That's what's gonna be doing. And so 9, right? An event when really 19, right? 7 to 9. No, 8. We're not even 2 hours with you guys. I love you guys, but not save. And this one, we're going to edit, cancel events. Starting at 7 p.m. ET on Thursdays. Okay. Okay. They make it so hard for it to change, right? Nothing likes being changed but a baby. Baby loves change, right? All right, we're still in here, right? I think we're natural. This is the euro. Gold, coffee. Everything is going to be going up. Coffee. That's the thing. Everything's priced in dollars, so everything starts going up. And that's inflation, right? Everything's going back up again, right? Lumber. Well, lumber is going down, but that's like inverted head and shoulders. Something I also like taking a look at is heating oil. Heating oil as we get close to the winter time, right? Heating oil. Oh, it's really taking a bath, right? You know why? Because we're not sitting over to China anymore, right? Usually we get like a rally going into July, right? See, October, right? So we're in this kind of seasonality where we're really below the previous low. You probably see usually the hottest part of the year is our low. But this is very interesting. What's going on with heating oil? Are we going to have a warm winter? Right. But energy may be on its way. And here's natural gas. You can see it came down really hard, and then it's now maybe trending back up again. Orange juice from Trading Places. Look at that higher high. Look at that nice trade in orange juice, guys. Sugar is getting ready to rally. Look at that nice bottoming formation. 19 cents a ton or something like that. Yeah. Why? Because sugar is priced in dollars. When the dollar gets weaker, this is going to shoot up. There's that big gap from 26 down to 20 to 26, 6-cent move. We could see a possibly 9-cent move. Yeah, no, 6, 7, 7. Yeah, 7 cent. This is in cents, so it's 26 cents. So a 7-cent move, and I think I forgot, it's like $1,000 a cent or something like that. It's a powerful move, right? Sugar. If you're trading sugar, you want to pass a prop challenge in futures, get long sugar, leave it, and you'll probably pass within like a couple of months. Right? But this is what I teach people: technical analysis, the ability to look at charts and forecast price. So that's something. Hey, you want to invest in lead? Lead's coming up too, right? Get the lead out. Lead foot, double bottom on lead. Go long lead, boys. Soybeans should be interesting. Soybeans, big demand comes from China. A lot Chinese consume a lot like tofu, lots of different dishes that involve soybeans, and we export the soybeans for feed, for cattle feed, and so we've been seeing this downward move in the direction of the Chinese stock market, right? Cocoa, look at that. That was tremendous rise, right? We can see another rise in cocoa back to the 1250 here. I mean, I can do this all day long, but I'm not. But anyway, I love talking to you guys. Again, if you want to join Elite Traders University, we have a special, back to school special, and you can reach out to me on DM me on Messenger. Make sure you follow me on Facebook if you're not a follower. You can also follow me on my YouTube channel as well. Okay. So guys, so good to be with you guys. I wish you much success in your trading. Remember, happy trading. We'll talk to you soon. Peace and pips. Greg out. Bye.